So today I'm going to do my UK portfolio review. So this is what I do on YouTube every 3 months, so you guys can see how the UK portfolio is doing. I've done it for many years, so anything that I buy, anything you sell, you see the allocation of my positions in this portfolio review. And like I said, I update you every 3 months on the YouTube channel, a lot more than whatever a lot of other YouTubers give you guys. And yeah, if we actually go on the YouTube search, you can see the previous ones I've done. So January 2024, April 2024, and obviously it'll be towards the back end of the year, you guys on YouTube get the next update. If you do want to see it every month though, if you do join the Patreon, links in the description, £5 a month, you actually get a monthly update on there as well. So we'll go through how the UK portfolio is doing. I've got to say though, today, still in Italy at the moment, something very, I'm going to walk you guys actually. I've got Mount Vesuvius actually in the background of today's video. If I spin around this way, here, where are we at? That there, oh, is actually Mount Vesuvius. That's not something that happens in every UK portfolio review, is it? Anyway, let's get on to the UK portfolio review. Anyway, so here we go. Very happy with how it's going, especially with the bear market. And UK stocks, they've had a bit of a tough time at the moment, but everything in here is actually going quite well. There's one or two positions that I want to balance out. My main aim is to probably limit the amount of positions that I do have in the portfolio. I would like to trim it down by maybe 3 positions in the next coming 12 months. Hopefully by then we've had a few winners and maybe it's the time for them to go. Overall, the UK, I've got to say, I'm not as optimistic as I was 12 months ago in the UK. I'm a little bit worried where we're going in the direction of the current government at the moment and how much like capital gains changes could maybe affect UK investments. Maybe it's worth a little video on actually. But apart from that, yeah, I'm very happy with how it's going. And like I said, I'll spend a minute or two on every position. I'll do the US portfolio review for you guys, probably next week for you guys as well, which I should have done 2 weeks ago before we had the big dip as well, because some of those stocks were up absolutely massive anyway. So first one is Aviva. You can see here at the top we're up 20% on Aviva, which is very nice because actually when you throw the dividend yield on top, which I'm actually getting around about an 8%, 9% dividend yield on Aviva, I'm probably up more towards like 35% on Aviva. I've got to find a way of actually putting dividends in on top of these share prices because obviously that can make a big difference. So yeah, I'm up 20% with dividends on top. I'm up a lot more on Aviva. Really happy to hold Aviva. It's ticking on nicely. Management are doing a very good job. Valuation's pretty okay. Like I said, I can just easily collect a lovely dividend from Aviva as well. That's what it's in for, is a bit of a dividend stock. Yeah, really happy with how that's been performing. Maybe we should have bought that a little bit more aggressive actually, to be fair, but hey, it is what it is. Air South Africa, we're up about 10% on Air South Africa. I mean, once again, dividends as well. I've owned this stock for quite a few years now. I think it's around about 4 years I've owned Air South Africa. If I didn't average up, I'd be up a lot more, but I keep averaging up on the position, which unfortunately, if I didn't average up, I'd actually be up over 190% from when I first started buying. But I keep averaging up, and then as well as that, the stock's actually gone down a little bit in the last 2 years, which has then put me on break. Well, not break even, up 10%, and then obviously dividend wise probably collected a good amount of dividends off the stock as well. So with that, I'd probably actually not only be 10% up, I'd probably be up over 30+% on this position with the dividends included. But also that, also share price is a big thing at the moment, and I'm really happy with how the business is doing. The big thing you have is the FX impact. If it wasn't for the FX impact with this business, the financials would be absolutely amazing. But there is the FX impact. Hopefully that goes. The CFO has been buying in the last few days, which is another sign of confidence maybe. So yeah, I think as long as that FX impact can go, it would really start flying. So we'll see what happens. And that leads me on to 2 stocks that I really like. One that I don't like so much, which is ASOS. It's been flat, well, down 9% year to date, but not a good performer over the last few years. Had a big boom because of the CV situation, and then obviously rivals like Shein came in, absolutely killed it. Same with like the likes of Boohoo, for example, and hasn't done very well. So it's not in a good place, and financially it still needs to get better. I'm hoping though, because they can sell the trendy brands like Nike, for example, which is having a tough time, which gives me confidence that when Nike sales come back and a lot of these big brands do come back, then they'll do very well, because they can sell not just their products but other companies like Adidas, for example, and North Face, so Levi's. So when it does get a little bit better in this sort of space, then hopefully they do still start bouncing back. That's why I sold Boohoo, because they don't do their own brands and I don't think they've got that much moat around them, so hopefully they can kick on. But I'm so on them. I don't know if it will. I'm willing to give them another 12 months and then we'll go from there. So that's we'll keep an eye on that one. Barrett Development's up 13%. I'm really happy with this. Same again, I've got very good dividends over the last kind of few years from Barrett Developments. So I do get a 5% dividend right now. Same again, I'll be up a lot more, probably towards 20-30% on this with the dividends included. Housing sector, hopefully we start seeing the rebound. There wasn't much of a hint in Barrett Development's last report, but looking at Persimmon's latest report, they actually showed some good signs of recovery there. So maybe we're going to see the kick on in the housing sector now. I think it might have bottomed. In fact, if you do look at the share price of Barrett Development, it does suggest a kind of bottom in there around about April time, which is when I said actually that I think it will bottom. So yeah, I think that this will do very well in the next few years as well. K-Box, I'm still surprised K-Box isn't really kicking on at the moment. I'm down 5% if you add the dividends on top once again. I'm actually up on this position and probably around about 10-15%. So I'd still be up on this position if I included dividends, but I get 5% dividend yield, which is really nice, and it's currently 14 times earnings, which I think is a bit undervalued for this company because the financials they're doing are really good. 10% revenue growth, 4% net income, yeah. Happy with that one. The next one is Card Factory, which has actually been on a pretty good run at the moment. It's had a bit of a bounce up since June time, up at 27%. Still on up about 15% year to date, which I actually think it should be up a lot more than that. 8 times earnings, still a good valuation. Does pay dividend, which Google doesn't show, which is around about 4% dividend yield as well. That's only just come back, so nothing I can say like it would be up if I include the dividends because that's a new one back. And financially, all moving in the right direction. Really good business, and I think a few people kind of got bored of holding this stock because it didn't do anything, but maybe this is where we start seeing the share price doing one of its big bounces, and hopefully it kind of breaks out this range. But yeah, been a good performer in the portfolio for the last few years. This kind of pink and red box here, this is a brand new stock. I only bought this one in the portfolio around about 7 days ago. Was it last week I bought it? No, I think it might have even been Monday when we had the kind of flash crash that was going on. Yeah, I bought a brand new stock into the portfolio. I've not talked about it yet on the whole YouTube channel, and I'll probably reveal it in probably 2 weeks' time. But obviously you guys on the Patreon know which new UK stock that is there. And yeah, I probably could double the position size of that one. Jet2 is up 44%. Same again, this is a stock that I've had for a long time in the portfolio since around about 2020. One of the stocks I bought during the CV situation. The stock from that time is up 143%. Same again, I've been averaging up on the position though, and I've been collecting a little bit of dividend there, but not as much there. So when I look at Jet2, I'm potentially thinking about, do I potentially sell this one on? I just think that when I look at the travel space, is it at the top of the top it could be because of 2021, 2022, 2023 coming out of that big CV boom? Is that basically the top of travel? And also looking at like Ryanair's numbers, Airbnb's numbers, but EasyJet, Jet2, both of them have been bringing out okay numbers. And is it potentially that these are stronger brands? Is Jet2 a stronger brand? And when you look at the recent financials, it definitely looks that, because the that's not right by Google's numbers there, but the recent numbers were absolutely amazing. So maybe I hold it because it's the best of the best company here. I don't know. That's one I'm thinking on potentially releasing some capital on. And also when I look at Jet2 as well, it's not one that I've been buying as aggressive. So the whole position size now is falling a bit behind the rest of the portfolio because the positions in the portfolio are getting bigger and bigger. And because I've not really been buying it into it, it's falling behind a little bit at the moment. So is it time to move on from that one? That's one I'm thinking about maybe selling and cashing in. Game Realms, that's up 14%. That's a relatively new stock. It's one that I bought this year. Started buying around about April time on this dip here. The stock is up 35% since that time frame, but same again, I have started averaging up on that position slightly. I do like getting it around 16, 17 times earnings, and the numbers from this one has been really good. Yeah, they just came out with an update not too long ago. Yeah, about a week ago on July the 31st, and the update was absolutely amazing. The reflected on year increase of 18 and 21% revenue growth. All the profitability is moving in the right direction. EBITDA was up 45%, and yeah, you're getting a big growth coming in the UK for 20 times earnings. I think that this should be a bit of a premium, and if it keeps growing at these sort of levels for a while, that valuation is going to look very cheap in the next few years. So big fan of Gaming Realms. The next one is Hollywood Bowl. Obviously been once again a long hold in the channel, up 74%. once again, a lot of averaging up going on in this business. I keep adding into this one because it's a good winner, good performer. From where I started buying during the CV times, it's up at 134%. But I keep averaging up, like I said, collect a 4% dividend yield. So you add the dividend yield on top over the last 3-4 years, you're up nearly close to 100% on this one. And 15 times earnings, I think that's cheap for this company. Very good financials that it's just come out with. Really good growth plan into the Canada space, and everyone I see talk about Hollywood Bowl talks about it negatively, and I just don't know how they do it. So until people realise how good a company is, I just keep adding more shares into that one. Greggs were up 117% on, really good performer, held this one for like the last kind of 4 years. Same again, if you add the dividend on top of this one, we're actually up over probably 120, 130% on this one here. I've not actively been buying that one as much, that's why it looks up so much. Last time I bought some shares, I think was in 2020. The only time I've actually touched this stock is I sold half my position off in 2021 and cashed it in. But I've held the rest, and I might continue to hold the rest. We'll see what happens. But they came out with some really strong earnings not too long ago either. JD Sports were about break even on that one. I think their numbers have actually been really good considering the environment that a lot of these stocks have been in. When you look at Nike, for example, the numbers have actually still been very good for them. 12 times earnings as well. It's not a bad valuation, so I'm holding that one there. Legal & General, that one's actually had a bit of a pullback recently in the last kind of couple of days. You see here, bit of a bounce up in the last week though. 9% dividend yield as well at the moment, which is like, you don't even need to worry about share price gains. I mean, obviously I do want some share price gains from it, and I think it will do. It's still below its peak that it was in 2021. Yeah, it's still down like 27%, and actually before the whole CV situation, it's still down 26%. I think when interest rates are cut and people are getting, lower interest on the cash, I think a few people will be staring at Legal & General going, I'm going to go get that 9% dividend yield there. So I would expect that one to do a little bit better sometime soon. The numbers have actually been still okay from it, to be fair. Money Supermarket is getting a bigger position. I'm really thinking about this one coming a big position, like top 3, even top 1, number 1 holding in the portfolio. I am down 9% on it. It's been a bit of a funny one because I've had this one for probably 1 year now, 2 years now. I started buying in 2022. The stock started rallying up massively, and then since then I was like, okay, I'll still buy a bit more. So for the next kind of couple of months, I averaged up on it, and then it's funny enough, it's actually started coming down again in the last this year, and I think it's down this year. Yeah, it's down 21% year to date, which I don't think it should be. 15 times earnings, quality business. I think they should be 20 times earnings. Collect a 5% dividend yield, so actually I am down 10% on the position, but if you add the dividend on top, I'll probably be about break even, maybe even up on the position. The recent earnings were good, 4% growth, 8% on net income growth, and also they're going to have, if interest rates are going to get cut, that's going to help them. If the energy market comes back next year, which it will do, that's going to help them. So they have big tailwinds coming up, and that's why, I'm really thinking about making it my largest position in the account, so we'll see what happens there. Mobico, not really talked about this one too much at the moment, but the reason why, I always get asked a lot of questions about certain stocks, like what about this, what about this, what about this, and like I've had a few questions about Mobico, and I won't talk about it on the YouTube channel if there's no news about it, and there hasn't been any news about it, so that's why I've not talked about it. If there's news, I'll talk about it, but there isn't. So we're exactly the same situation where we were like 3-4 months ago. Nothing's changed, and I'll just end up covering what I've already covered on the YouTube channel with Mobico. Been stagnant for a while. Well, actually, year to date, it's down year to date, but the last kind of couple of months, it's been stagnant since the last update. We do have a half-year results coming out on the 21st of August. The last update we got was positive, 6% growth, and the big thing is that operating profit was to be in the range of 185 to 205 million. If they do that, I think the stock will bottom and we will kick on. But the thing is, we saw these kind of same numbers guided last year, and then it really dropped off at the back end of the year. So we'll see if there is any form of drop off in that. We'll get a good idea on the profitability, and if they're actually holding to that in the half interim results. I mean, analysts are expecting like 49 million in profitability. If they do that this year, the stock won't be a 329 million market cap. It will end up probably going up 50 to 100% in my opinion. But the big reason why it's not doing that is because the market and investors don't believe they can do it. They've got to prove they can do it first, and then if they prove they can do it, then the stock will rally. So we'll kind of see what happens with Mobico. it's just for me a hold and see if it can do the numbers, and if it does, it should kick on. If it doesn't, it's not good, but we'll have a good idea. I'll do an update on them probably in 2 weeks' time when the interim results come out. Supreme been a very good performer for us this year. I'm up 86% on my position. Year to date, the stock is up, 86%. Bang on what I am. Still good valuation, 10 times earnings. Dividend as well. The dividend on top, it's probably up more towards like 90%, so been a very good performer from us. S4 Capital, same again, there's not been really much news on S4 Capital, so I've not really talked about it. It's just been stagnant. Like, the share price hasn't really done much this year. Financially, it's not really done much. There's been a bit of downgrade in the profitability and the revenue guide, which isn't good. The marketing hasn't really come back as what we have hoped. It's a bit stuck in a slump at the moment, and I think ultimately if Martin Sorrell can get it sold and sell it up and someone buys it out, I think that would be the best solution here. I mean, what the stock currently is valued at is what, 50p, is it? I mean, somebody was looking at buying it, a year ago for like £2. If they can get, I would even go to as far as saying like £1.50 for this stock, take it. But there's no recovery at the moment, and there's no signs of recovery, which I thought there would be by now. So it's getting a little bit concerning for S4 Capital. We'll give it another 12 months and then we'll see where we're at with that one. YouGov down 19% on that one. Obviously, big profit warning came out. It's since then come out with a profit upgrade. Kind of not as bad as what they kind of made out, which I thought would be the case. That's why I bought some on the dip, and hopefully they carry on improving as the year goes on. Watch of Switzerland, that's a bit of a turnaround play. Only up 2% now though. That's had a bit of a pullback in like the last week. That could be very recession sensitive, so that could be quite volatile. So we'll see what happens there. And the last one's Warpaint, which we're up 16% on. That's been a very good performer. The financials are absolutely amazing, as you can see here. The valuation's not too bad when you start factoring in the growth. They had an AGM update on the 26th, and they came out saying like growth is still very good. They said that their sales continue for the 6 months to be 46 million compared to the prior 36 million, so still growing at very good rates. And if they keep growing at these sort of rates, they grow into that valuation very quickly, and the stock goes on to do very well like it has done previously. That US expansion is very, very good for them, so we'll see if it continues there. And that's all the positions overall. So yeah, happy with how the portfolio is doing. It's doing very well. A lot of stocks performing very well. Obviously the new stock in there, that is a good addition into the portfolio. I wanted to get a little bit more exposure into that space with the stock that I did buy, which I'll talk about in a little bit. A lot of stocks performing very well. Like I said, even Barrett, which when you add the dividends on top, Greggs, Huddleball, Card Factory, Jet2, I think the new blood in there like Money Supermarket will start really kicking on as well. A lot more dividend stocks as well in this portfolio compared to the US portfolio. Supreme being a good performer. I'm still confident on Mobico, hopefully, if they bring a strong update out. The only ones that I'm kind of watching at the moment are like ASOS. Can they turn it around? I'm not sure. And probably S4 Capital. I thought they'd be in a bit of a better position than what they are right now, and they're not. But I'll give them another 12 months and see where they come from there. But yeah, overall, I would say that good 90% of the portfolio is performing very well. And the only thing that I would like to do is probably bring the portfolio down by about 3 positions in the next 12 months. What they will be, I'm not sure. I'm in no rush. I'm not going to rush to do it next month, but over the next 12 months, that's something I'd like to do if the time is right. But that's everything. So I hope you enjoyed the update, and I'll do another one on the YouTube channel in 3 months. If you do want to see it monthly, then the Patreon is the place to be. Link is in the description, and that's £5 a month. I hope you enjoyed the video. See you in a bit.